Welcome everyone. My name is Leyu and I'm from the Singapore Exchange. It's my honor and pleasure to be here today at Wow Digital's very first online series and to be moderating this esteemed panel. With us, we have two very well-known veterans of the VC ecosystem here. We have Kay-Mok, who is the managing partner from Gobi Partners, and Chao, who is the CEO of Southeast Asia from Innoven Capital. Now, before I get started, I have to highlight some FAQs. So let me start on this first. Okay, so firstly, if you find yourself disconnected at any time during the session, please just log back in via the same link that you have. Also, throughout this session, this is a 1-hour session, you are on mute, but please feel free to jump in at any time with your questions. You can submit them either via the icon below, that's a Q&A icon, or you can also click the raise hand icon and someone will attend to you. Okay, so I've done the admin homework. Now, without further ado, maybe we can start with Mok. Maybe you can give a brief introduction of yourself. What have your experiences been in the VC ecosystem? And to make it more personal, maybe you can also share on one of a success story that you're very proud of, or maybe a success story that got away from you and that you still think about, at night, wishing that you had invested.
Thanks very much, Leyu. So maybe I can start off. So I think Gobi, we're actually a pan-Asian VC firm. We manage about 1,000 funds. So asset under management is over $1 billion US. A little bit about myself. So I'm actually a government scholar who became an entrepreneur, finally became a VC, right? So I actually got a Singapore government scholarship. I went to study computer science in Berkeley. And right after graduation, I actually hit this .com wave. So I was actually co-founder of a cybersecurity startup during the .com days, and subsequently sold off the company. So I came back to Singapore about 15 years ago. Started working with a government venture fund before striking off on my own. So I started the Southeast Asian practice for Gobi in 2010, so about 10 years ago. So obviously I've been through the cycle for the whole 10 years. So seen my fair share of winners, misses, right? So in terms of a winning deal, what we have invested, we're invested in a smart news app called Babe. It's actually focused on the Indonesian market. This deal was actually bought out by ByteDance. So ByteDance is actually the parent company of TikTok. So I guess everybody is familiar with TikTok. But ByteDance actually first started with a news app called Toutiao. So basically the company was bought out by ByteDance. So that was a very successful exit for us. In terms of misses, we actually missed out on one of these big, I would say, travel unicorn. This was in 2013. We felt that, hey, look, the consumer market is growing in Southeast Asia, and there will be a lot of demand for budget airlines. So we're negotiating the deal, and we actually got our Chinese partner, who's a travel expert, to look at the deal. And unfortunately, in China, they have no budget airlines. So actually, when they look at the deal, we price it too low. So as a result, I think, probably just to share, right? So it's just a few $1 million difference. We actually walk away with the deal, right? So it was a very painful miss. I think one of the lessons that we learned is during the bullish time, during good times, sometimes valuation may not mean as much, especially for VCs, since we're actually protected on the downside with preference shares. So I guess that's a good intro for Gobi and for myself.
Okay, so let's move on to Chin. Please share a little bit, how have you seen the market change? And again, maybe some personal anecdotes on, companies that you're proud of or that you wish that you had paid more attention to.
Sure. So I'm the CEO of Innoven Capital Southeast Asia. I was the first employee, and I started the Southeast Asia office back in 2015. Before that, I was in the venture capital industry, primarily with a firm called Venture TDF. I joined them in 1999, so I've been in this game for a lot longer. We actually invested in Kay-Mok's first startup that he founded back then in the .com boom called Private Express. So it makes me feel a little bit old now when I think about it. But let me think about so easy on the successes. Everybody remembers successes. So we were first round investors in Alibaba back in 1999. So that's probably the big success story for the venture TDF group. Painful misses. So I was thinking about this. So easiest one is that I had the opportunity to invest in the seed round in Garena, which is now C, back in 2007 timeframe, and then also had the opportunity to invest in their Series A round in 2008, 2009, both of which I passed on. So you win some, you lose some, I guess. But I think there's always going to be those ones that you wish you would have done. But as long as you get a few on the winning column, I think you're always okay.
Yeah, and that's a VC mentality as well, right? To make sure that you're sufficiently covered in a sector, and then hopefully some of them become unicorns. So we have to move on to, I guess, what is the real topic of 2020. COVID-19 has drastically changed our lives. I think it's changed the way we view work forever. Even at the exchange, I think it has changed so many ways we view things that we thought we could never not work from office. Things like clearing, things like trading execution, that now we're starting to change our minds around that. So from your perspective and from where you sit, maybe we can go back to December 2019 and what you thought was going to be the outlook and what you were interested in. And then now, almost 6 months later, how has that changed? Has that changed at all? I'm sure it has to a certain extent, but how has it changed your outlook on certain sectors, or how you would approach investment in general on the VC ecosystem? Maybe we can start with
first.
yeah,
Okay. Okay. Yeah.
Sorry,
So,
yeah,
no worries.
Yeah.
Okay. Yeah, so I think the key thing is this. So I think 2019 has become quite clear that things are slowing down, right? So if you remember in 2019, we have the IPO of WeWork and Uber. WeWork didn't really go IPO, but we have this kind of planned IPO that failed, right? So I think it has become clear at that point that the market was slowing down. And also, if you think about what has driven the VC ecosystem for the last decade, was actually smartphone, right? So I think the penetration of smartphone, I think, is already, I'll say, hitting the mainstream, which means we're actually at the tail end of this, I'll say, the mobile revolution, right? Where whether it's food delivery, e-commerce, all of it is driven by the smartphone, right? So the challenge is this pandemic is, I think, obviously it has shut down both supply and demand, right? But what we're thinking is actually demand is going to be very hard to restart. So I think that that's going to be a very key feature going forward. Is the demand is destroyed, and it's not easy to restart because it's actually very hard to synchronize restart across different countries, across different borders. Right? I think the best case of a restart is China, which obviously is quite self-contained. They have their own supply chain, their own demand, right? So I think maybe China will get out of it faster. But even then, we feel that demand will be dampened, I think, for the next 2 to 3 years. So I think as a result of these macro changes, the kind of deals we are looking for now, we've shifted to the supply side. So on the supply side, if you are old enough, you actually remember the third industrial revolution, which is basically IT, right? So IT actually came out in the 70s, in the 80s. They actually created the first wave of VCs, right? So guys like Warden and all that who invested in companies such as Creative, right? So during the PC days, there's a lot of companies doing peripherals. Creative actually focused on sound card. They became successful. It was actually the first Southeast Asian company to list on NASDAQ, right? I think today we're a revolution, put simply. So it's a lot of these 5G applications, AI apps, whether they are used within a factory setting to automate manufacturing, or whether it's smart city, right? So I think we're now more focused on the supply side because it's really the next step of the revolution. So I think at this stage, it actually reminds me a lot of the 80s, very raw. I don't know who is going to be the winners out of this, but I think this is one of the major change that resulted from the pandemic, is we're focused on the supply side innovation.
Okay, so for Chin, I think it will be interesting because for Innoven, actually you look a bit more at debt, right? Venture debt. So how does that differ from what Mok was talking about from an equity perspective? We also got an interesting question. So they also ask, if you're looking at investing at this point, how has the due diligence process changed? Because I mean, obviously you can't travel. So is the time, the runway to closing a deal much longer compared to last year? So I think you can kind of put that together in terms of how that's changed our outlook and also how this affects operationally how you invest.
Sure. So as you point out, so Innoven Capital, we provide venture debt. So basically, it's a complement to the equity Kay-Mok and his group does. So I think we've had the opportunity to look. We have offices in China, in India, and in Southeast Asia. So we've had time to see what has happened in China, and sort of taken some cues in terms of what we see. In the future, it's a crystal ball. We can look at China a little bit ahead of the curve than where we are in Southeast Asia today. So if you go back to December, I think we were thinking about probably going to do about, let's say, 30 deals this year. We had done 14 deals in 2018, 24 deals in 2019. So I think, if we look at what has happened, I think we'll probably complete around the same number of deals this year as we did in 2018, reduct deals. And to go to your question, I think funding rounds take much longer than, I have stayed there much longer than we anticipated. And that's just because the equity rounds that are closing now are taking a lot longer. And primarily it's because I think people are looking for some clarity as to what type of recovery is going to happen. Second, I think it's very tough to do diligence when you can't go to the company's office and meet the founding team, meet the key people, walk around, get the feel of what the office is like. All those soft factors that you'd otherwise be able to choose from, you can't do that as effectively online.
Okay. So then if we talk about the actual companies in your portfolio, so some seem to be doing really well. I guess if you are doing food delivery, definitely if you're doing cloud, 300 million subscribers over such a short period of time, how has this impacted the way you're looking at your portfolio companies at this moment? If it's not too confidential, maybe you can also share some specific examples, and maybe you can also talk about how you see the VC's role in terms of how you should be supporting the companies during such a period. Maybe we'll start Chin first because I keep starting with Mark.
Thank you.
Sure. So we currently have about 40 companies in Southeast Asia. So I would say close to 90% have been negatively impacted either directly or indirectly by COVID. So I think we've seen very few companies in the portfolio where there's been tailwinds for COVID. If you're in enterprise software, for example, customers are taking longer to evaluate, sales cycles have increased, your customers are taking longer to pay you. Companies in travel are, of course, directly hit. So and just on, in terms of companies, suppliers, companies, customers, delaying payments and so forth. So I think that's been challenging for all companies. I tell companies when I meet with them that it's a collective effort between you, us as the venture debt provider and your equity providers. It's a collective effort to help support. So, companies, I think almost all have reevaluated their business plans for next, for this year and probably next year, cut costs where they can. And, if they had to sort of lay off people, they've done that. So I think, it's everyone sort of doing their part and trying to help companies sort of survive. And I think that is probably my key advice for a lot of the companies is that you just got to make sure you survive the situation first. That to me is the most important. And once you sort of eliminated that mortality risk, then I think you do a lot of scenario planning around how to sort of best get up and running once the business environment and your competitors, when the market starts to open up.
Okay. And for Mark, what's your advice that you would give to these companies? What are some things that they should learn from this? Fiscal discipline for sure, but how should they approach fundraising? How should they approach the way they're looking at growing their businesses in the region, for instance?
Okay. So I think before that, I just want to kind of add that what we're seeing is actually a shift of social consumption to anti-social consumption, right? So I think essential services that can be consumed at the personal or I think at the family level, those are actually the winners. So I can give you some examples from our portfolio, right? So we have a used vehicle marketplace startups. Actually, demand has spiked. And it's actually, the logic is very simple. People are actually shying away from ride-hailing, right? Because of safety concern, right? So unless in Singapore where the car population is controlled, you actually see a peak of people trying to get cars so they can drive to wherever they're going, right? And even in the US, it's a very strange phenomenon. So a lot of business travelers in US now, they're actually switching to private jets, right? Because private jets actually have become cheaper because you can get the whole plane, right? The price is actually half of before, right? And because of the hassle at airport and the danger of all these scheduled flights, you actually see a pickup of private jets in the US, right? So I think there's actually some fundamental change in terms of demand side, which is, I mentioned all these anti-social kind of consumption, very privatized kind of consumption, right? So for winners, our advice is actually to go and raise fund, right? Because this is a time where if you raise fund, you're going to be the winner, right? So actually, it's opposite, right? But if you're the winner, this is a good time to go and raise funding, right? I think for for those that negatively affected, obviously I think Chin mentioned, hey, you have to hunker down, right? In extreme cases, we're actually doing surgery to these companies now. So for example, we're actually dissecting one of our company where we are speeding off an essential logistic business from their e-commerce business, right? So I think these are extreme cases where we actually have to go to surgery for some of these, I'll say, startups that's caught in this adverse situation.
Okay, so that was interesting. That's the first time I heard of anti-social consumption. So that's accurate. I guess if you look at Netflix subscription over this time, including for myself, it's definitely gone up for my family as well. Okay, so since there is a challenge for your startups, I mean, definitely I would suppose that you also face some pressure from your investors, or even supporting your companies when they're trying to plan for their funding rounds. Maybe you can share more. Maybe I'll start with you this time. What's your experience with reaching out to Asian investors? Since we're the nexus of Asia here, what do you foresee will be their key interests? And therefore, how would you make your advice to companies when you're pitching to them?
I think from my perspective, I think the difference really I see is not Asian investors. I think it's really the difference between financial investors and corporate investors. And the reason is this, right? So for corporate investors, so corporation, right? Especially those sectors like telco, media, even transportation, those that actually are sort of disrupted by technology innovation, I do find that they are more progressive, right? Because they know, right? A lot of these guys have set up corporate venture funds, right? They know that their core business is disrupted. Just look at the media industry. Most of the advertising dollar today goes to YouTube, right? It used to be a very local business where TV captured most of the advertising, right? TV, print, right? Today, a lot of advertising is borderless and it's going to YouTube. It's actually globalized, right? So a lot of these guys who have seen their business being disrupted, they actually are more keen to invest in the future, right? And the strange thing about financial investors is because they're always looking at the rearview mirror. They're always looking back and say, hey, look, where is the return for technology investment, right? Especially in markets like Southeast Asia, you look back, you don't see much return, right? Because not a lot of companies have gone IPO, right? You have all these hot companies like Grab, but they have not gone IPO, right? So for the financial investors, I think what is happening is they're starting to realize that looking back, past performance and all that is not doing them any good, right? So I think with this pandemic, what has shifted is I do think there are a lot of funds, whether it's family offices, private equity funds, they realize that, hey, look, investing in all these backward-looking businesses like offline businesses is actually highly risky, right? We're starting to see a lot of shift of capital from those other asset classes to technology investments.
Okay, that's very interesting. And would you echo that as well, Chin, or do you have a different perspective on Asian? Okay, maybe so not Asian investors, but investors in general that you're reaching out to. How would you cut them or segment them, and what would you advise would be the way to pitch to them for your portfolio companies?
Sure. Not much to add. I think at Innoven, sort of we're almost uniquely positioned in the VC ecosystem, and that we work with almost every VC in the region and every equity investor in the region. So we sort of see what each investor is doing, what they like, what they don't like, and everybody's different. I think it's hard to cut across everyone with the same brush. I think everyone's got a little bit different things that they want to look at, different types of teams that they like, different sectors, different stages. So my advice would really be to do your homework on the companies that these VCs have invested into, where the VC firm is in its investment cycle, and also, when you reach out to VCs, make sure you get an introduction to them from someone who knows them fairly well. I think that would be my advice on sort of how to approach VCs in this time. I think all VCs have, so several VCs have reached out to me and to my team at Innoven, basically asking them, hey, what companies are interesting out there that we should take a look at? I do think investors are looking. Now, each one has, what they're in different things that they're looking for, but they have, a lot of investors have capital and they are, actively looking for, investments during this time period. So I think you just got to be selective and do your homework.
Okay. We do another question, which I think is quite relevant to what we're talking about here. So I thought that I'll just add in the question as well. So the person is asking, can you name 2 to 3 factors that would make a startup desirable to you, when you're, I guess, reviewing a startup's pitch right now, like just 2 or 3 things that will stand out to you during this period. Chin?
Okay, I can.
I mean, venture debt's a bit different, but I mean, I would still say, I think, Kay-Mok will say the same thing. I think team is very important, would be the most important. For me, as a venture debt provider, we're looking at, companies' runway and companies', investor base as well, right? So I think those things are important to us. But for me, it's going to be team and the business model. For the sort of, I would say, the VC side of things. I think, specific to venture debt, we're going to be looking at who the investor groups are and existing investor groups, and also sort of cash runway at this point.
Okay. Kay-Mok? Or is it like specific sectors that you might look at, for instance?
Yep. I think the thing I'll look at is actually, I used to work in media corp as well, right? So in the media industry, during a recession, the first thing is actually the advertising revenue will drop, right? So I think what's impressive during this period, if you are a startup where if you have cut off advertising, that means you have no advertising and you're still growing. That's going to be impressive because it shows that, look, your whatever services you're providing is actually essential. You can cut off all the advertising, people are still going to you, right? So I think that's the most impressive factor if you happen to be in this state of situation currently.
Okay. And if we lead on from this topic, maybe we talked about how you would look at companies, and then we talk about, how the companies are doing. And I think universally we acknowledge that it's a tough time, but I think we also know that this is transient, and we hope that the outlook for next year will be better. And then we move on to a topic of exits, right? Because I mean, that functionally would be a key KPI for your VC. Has this changed the way in which you would look at exits? Or do you start preparing earlier? Would you start thinking about reaching out to specific investors, much earlier in advance now? Generally, what would your view be on this area? And okay, we'll start with Mok this time.
Okay, I think most of the exits in Southeast Asia tends to be M&A. And the reason is because if you look at the tech startups in Southeast Asia, they tend to be market driven, right? Because of our diversified markets. The value for Southeast Asian startup is really, I would say, the operational capabilities across the region, right? So as a result, it takes a lot of effort. It's not exactly 0 to 1 innovation, right? So the real 0 to 1 innovation is basically IP based, right? You're kind of developing core technology, right? Over here is really application of technology, right? So the real value is how do you build a regional platform that, let's say, someone like a pure play guy, right? Say a tech giant from China or from the US, when they come in, it's actually very difficult for them to replicate this regional footprint across such a diverse region, right? So it makes a lot of sense for them to pay a premium to acquire, right? So I think as a result, most of the exits here have been, I would say, M&A, right? With this pandemic, as I mentioned earlier, there's going to be an influx of funds into technology business, right? I think before, only VCs and maybe tech corporations will focus on all these tech startups. I think the pool has widened. Anybody who's thinking of investing in a restaurant, they're going to think over, will start to pile into this tech sector. I think there's going to be a lot of liquidity along the way, right? So if you're a VC investing in early stage, as you start to raise the next round of funding, you're actually going to start to cash out along the way, right? So I think the exit scene is going to be, I think, much more vibrant because of this focus on tech startups going forward.
Okay. And Chin, what would you think about? And obviously this is a topic close to my heart, being from the Singapore Exchange. But we also do recognize, I think what Mok is talking about, the regional fragmentation of Southeast Asia has generally made it harder for companies to scale, especially I would say in sectors like health tech, fintech, which tends to be quite regulated. But these are still very vibrant sectors. But Chin, how would you look at this topic of exits?
Okay, I've had 2 general comments, but I think I'm probably more pessimistic on exits, Kay-Mok here. So for me, exits are a function of sort of the ecosystem and a function of time. So if you take a look at, the companies I talked about at the very beginning, Alibaba and Sea, Alibaba took 15 years to build up this business before it exited. Garena Sea took 10 years to do it. So it takes time to build these companies. So so when you're building a company today, you're really looking at what our exit environment is going to look like 8 to 12 years out. And I think it's anybody's guess what it looks like. So, because of this, when I think about making an investment today, I'm really not thinking about what the exit looks like. I'm really focused on team, what the business looks like. And if it's a growing business with a strong team, the exit will take care of itself. I'm not a big believer in building companies for acquisition. My view is it's the pool of potential acquiring companies, although there now are few out in the region, in my view, still hasn't reached critical mass. So in Southeast Asia yet, unlike the US, where you've got tons of companies acquiring other companies for technology and for markets, I just don't think that culture's here quite yet, and the critical mass of acquiring companies is here yet. So I think it still will take some time to sort of develop. I think the other question, given what's the current situation with COVID, is really exits are going to be really dependent on valuation. And I think anybody who's raised funds in 2019 and early 2020 are going to have to rethink what valuations look like in the next 1 to 2 years, because they've definitely come down from last year. So not only for exits, but also for your next funding round, companies are going to have to be much more accommodating, if I guess is a nicer word, on what the valuation will look like for their business, because it's definitely not going to be what it was a year ago. So I think that's going to pose a challenge and pose some headwinds in the near future.
Yes, I think absolutely. I think whoever can guess what's going to be happening, a crystal ball gaze ahead, I think would be the winner here. We have a question from one of the audience. So they're asking, should Southeast Asia startups expect a huge discount to valuation? Or how do we compare to the VC ecosystem in US or China? Mark, what do you think? I mean, you said just now there was really a slowdown, and I think the WeWork fiasco contributed a lot to that. I was in the Valley late last year, and that was the universal feedback as well. So has that gotten worse, and are we even lower down the chain, or how do we compare now?
From my perspective, I think down rounds will be common during all these downturns. You see that happening. That was from 2000 to 2003, right? So think about, before Facebook came out, a lot of these startups that were fundraising, a lot of them actually went through down rounds, right? So for people who have gone through the up cycle and down cycle, you actually see everything, right? So I think the same thing will happen, right? I think for Southeast Asia, as I mentioned, what might be interesting is maybe another macro trend, right? So obviously, I think down round is going to be I'll say probably the norm, right? But what is interesting, if you look at how the world is being split up today, right? So I think before, if let's say you are particular investors, you are keen on investing in US and China, right? That probably covers the world for you, right? But because of this deglobalization and all these supply chain balkanization, right, I do think that the world is splitting into different regions. Capital allocation will actually split up as well, right? So if you're actually an American investor, you may not want to put everything in the US right now, right? Looking at the situation, the pandemic, the car unrest that's happening, right? So if you're actually a US investor, you actually want to divest, and you want to, not divest, but you want to diversify, right? But you diversify, obviously China is a big market, but it's also a very sensitive market, right? Roughly 3 regions, just like the Cold War came about, right? Because of the Russia and the US Cold War, you actually got the third world. There's a non-aligned group of nations, right? So I do think that on the macro perspective, some of these capital allocation will actually split into a few different pots, and that could be actually positive for Southeast Asia.
Okay, and Chin, I mean, are you seeing a significant discount to valuation now, or how investors are treating Southeast Asian companies?
We haven't seen it. I mean, I'm hearing talks of down rounds. I saw one comment on the Q&A just saying something about valuation levels in Southeast Asia being already quite low compared to the world, and I think that's I would beg to differ with that. When I talk to investors who invest across North America, China, and Southeast Asia, they find Southeast Asian companies more expensive than their peers in the U.S. and in China. So I think particularly, I'd probably point to Indonesian companies in particular. They've had a nice uptick in valuations over the last couple of years, and global investors looking at the region have really said, made the point to me on several occasions from several investors that valuations in this part of the world are exceedingly more aggressive than what they've seen in North America and in China. So I think Kay-Mok's right. I think you're going to see down rounds, but I think there's also sufficient capital that is on the sidelines that could potentially be invested in this region. So the VCs do have dry powder. Whether or not they use it in this coming year or next year, we'll see. Or whether they continue to be super careful. So I think the capital is, unlike the dot-com boom where the capital itself was scarce from all the people in the VC ecosystem in Southeast Asia. There wasn't a lot of capital available. Now I think there is dry powder available. The question is whether or not the investors are actually going to invest it or sit on or not.
Yeah.
So I think for the seed stage companies, our fund tend to operate on a country level, right? So I think, in regards to this question, I think the first key is actually you got to be focused on the local market because if you cannot even be the home market champion, there's a question about whether you can even get out your own home country.
Continue from that because I also saw another question, for exits, and I guess I'm specifically asking this question since I'm interested. Given the huge success of C's post-IPO performance, does that mean that IPOs will start to be more attractive? And again, I know that's probably a bit less relevant because again, you're a bit more early stage. But how do you think this might change the way people are looking at exits?
So it's very important to maybe define exit from the perspective of the different parties involved, right? So I think the start is asking from a perspective of maybe the company itself. So the ultimate exit, is a cash out, right? I think Chin also mentioned that hey, exit takes a long time, right? It takes 10 years or 15 years because even if you're a scalable startup, it means you take a long time to scale, right? You want to grow as big as possible before you go IPO. But the exit that I mentioned about is actually if you're early stage VC, when you invest in a company, when the A round, B round comes, if it's an oversubscribed round, typically the early stage VCs will cash out along the way, right? So those are exits as well. So I guess, for startups, maybe your focus is, back to fundamentals, right? You just need to focus on your core business because exit may take a long time.
Okay. And Shin, what do you think?
Yeah, I think IPO has always been sort of this holy grail, right? And so the question I always ask people is, if you're going to list on Hong Kong Exchange, for example, you need $1 billion valuation before you can even think about it. So you're really talking a company that really has grown to a large extent like C has. If you're looking at a $200 million IPO, for example, the question you're going to ask yourself is where can you do that these days in Southeast Asia? And I can't think of any place, right? I mean, maybe SGX, but valuation levels in SGX have always been challenging for tech startups in the region. So then people think, okay, is it Taiwan? Will Indonesian have a local market? People were looking at Australia ASX. People always look at NASDAQ, but again, NASDAQ's getting harder and harder because they also want the $1 billion companies as well. So to list on overseas markets, you're looking at very high, you need to build the business even further than you would think you'd have to do it to get those kind of valuations. And for local listings, where it's going to give you a good valuation. And I just don't have an answer to that. That's why I think IPOs are very challenging still in Southeast Asia. I think we're making progress in certain local markets, and hopefully that those continue to become more viable over the years. But I still think it's early.
And I think the strength of the investor pool for that sector matters as well. I mean, absolutely, I think tech valuations on SGX, you rightly pointed out, definitely challenging. And we also see a lot of, it's more nascent in terms of public investors who understand this space, again, compared to, I guess the consumer space, the healthcare space, or definitely real estate. So that's something that has to be ongoing public education as well. So I think we might be starting to close off. So maybe I'll do a last round of questions, and I'll just ask, where do you see things going next year? So are you a V curve, U curve, L curve, or whatever curve kind of person? And with that in mind, what's on your wish list? Whether you are looking for specific companies, specific sectors again. I know you touched on it a little bit, but just to round up, or how do you think this will even change the way you're doing things today? How will it change the way of life at your VC? I'll start with Mark.
Okay, so I think maybe just to kind of conclude where our observation is, I think on the demand side, it's very difficult to say, right? The V shape can become a W shape very quickly. Right? Once you have a second, third wave, right? Then you have a double W and so on, right? So I think demand side is actually going to be challenging, right? Which is why I feel that we're going back to supply side innovation, especially during these times. If you just look at the countries that are well run, the government actually has a lot of, I'll say, reserve. They're actually doing a lot of pump priming, right? So a lot of fiscal policy is actually kicking off, right? So you look at China as a good example, right? They are focused on a lot of infrastructure, 5G, all these robotics, a lot of these investment, right? Even Pinduoduo is doing so well in China because Pinduoduo is the sort of the Taobao marketplace to connect factories to, I'll say, the consumers in second, third, fourth tier cities, right? It's doing very well because that's what they're doing, right? They're flipping a lot of products from factories directly to Chinese consumer in China because there's no export in China now. They can't export outside of China, right? So I do think that, we're going back to this situation where there's going to be a lot of fiscal policy in place to support supply side innovation, 5G, all these applications, AI, robotics. So as a VC, my focus will be on the supply side. No doubt you'll take a longer term, but that's how business was like before in the 80s, right? So when you invest in the creative, right, it takes a long time, right? They have to figure out what's a hot product before they got it right? So I think we're back to, I'll say it doesn't matter whether it's a V-shape, U-shape, whatever shape recovery. I think we're back to supply side, which definitely is an L-shape kind of model.
And Chin, are you more optimistic or pessimistic?
I imagine I guess for me, there's so much uncertainty that it's very difficult to sort of make that prediction with any type of, accuracy. So, the good thing, and so it sort of fits what the venture debt business is in the sense that, we are sort of complements to what the venture capitalists are doing. So when equity rounds are being raised, that helps us for the most part. So I think that's, so my wish, when I think about sort of what I would want to see is, I'd like to see a lot of the dry powder that a lot of the VCs are sitting on be invested in whatever they believe in. And I think that's a start because I don't think we want to go back to what happened after the dot-com, sort of the dot-com crash back in 2000 in Southeast Asia, where really there was basically zero activity for 5 to 7 years in the tech startup space. From, if you look at 2001 to probably 2007, 2008, there was really nothing going on. So I don't want to see that go back to that, and I don't think we will. But it will just be that the ecosystem, I think, is a lot more developed since that time, and hopefully it can just survive and continue to build upon the strides that we've made in the past 10 years. So that's sort of what my wish list would be.
Okay. And okay, I'll just add on. I mean, I know I said I'm closing off, but I saw a question that's pretty relevant to this. So do you have a country interest outside of Southeast Asia, after COVID? So are you would you become more interested to look at, say, China, US, Europe, or any other region from here? Chin?
I really focus on Southeast Asia at this point. I just think that there's still a lot of opportunity here. And I don't see that same opportunity set in the US, even in China, and also not in Europe. So I really would say, for me, I'm going to stay focused in Southeast Asia, and I'm not looking anywhere else.
Yep, I think for me, it's interesting. A lot of things is basically the hub, so a lot of things can be done in Singapore. But more importantly, the government is actually pumping a lot of funds into, I'll say, the supply side tech innovation. So I think that's where the next wave of winners may come out from. So if you ask me, the country I'm most interested in right now is actually Singapore.
Okay, well, that's great to know. And, we definitely want to see the next local champion of this year as well. So, okay, looking forward, and let's see how all of this discussion pans out next year.